Hello, John Mills, South Bay Equity Lending. This is your market update. It's Thursday, November 14th, and it's the golden hour here in Redondo Beach, so a lot of people out walking. Here, I'll spin this around a little bit. You can see it's a beautiful day, clear, right by the ocean. You can probably hear the ocean. Wanted to give you a post-election market update. A lot of people wondering what the heck's going on with mortgage rates. Backing up a little bit, the Fed cut the federal funds rate, the Federal Reserve cut the federal funds rate in September by 50 basis points, which that directly ties to your short-term interest rates. So think of your credit cards. Your rates on your credit cards went down immediately. Maybe surprisingly, since that cut in mid-September, mortgage interest rates have steadily increased by about a half a point since that cut. And then last week, the Federal Reserve cut the federal funds rate by another 25 basis points. So when they do that, that sets the tone for interest rates in the market, but it doesn't tie directly to mortgage interest rates. And since that cut, rates have stayed basically the same. They've actually ticked up slightly, but they're basically the same as they were a week ago. So thinking we were going to get relief on mortgage interest rates with the Fed cutting hasn't really penciled out just yet. And I'll tell you why. The concerns are really around the number one driver of mortgage interest rates. Mortgage rates are long-term rates, whereas the Fed's really affecting the short-term rates. And the big driver, as I've said in the past, on the mortgage rates is inflation. And if inflation stays low in the twos, where it is now and where it's been the last 2 months, rates will come down over time. However, there is concern in the market with the change of leadership. It's hard to really know which policies are going to place and to what degree. But some of those policies are viewed as inflationary. And if inflation starts to go up, interest rates will stay up because those are a direct reaction to inflation. So that's what's going on. Hopefully inflation stays low and interest rates come down, and we'll have a whole bunch of refinance opportunities in 2025. But even so, right now, a lot of folks are taking advantage of real estate prices right now, which you might say, well, that's counterintuitive. But the thinking being that while rates are higher like this, the prices are being held in check. And so I've been doing a lot of purchase business the last 120 days. So if you're in the market to buy a home, this is a good time. There's still less competition because fewer people qualify, and there is the prices are still being held in place. And if rates do come down in 2025, chances are real estate prices are going to go up. So that's a lot of information and a lot of supposums and possibilities, and we'll wait and see. But that's the nature of finance and what's going on right now. So I think the bottom line in all of this is if you can find savings in a refinance, it's better to do it right now and a bird in the hand, because we don't know what's going to happen in the future. And if you find a home you really like and you qualify for it now, it'd be good to act now, because we all know that over time prices tend to go up. So there are opportunities in this market, both for refinancing and for purchases. And if you see something that makes sense, we've had some people say, I'm going to just wait for it to get better. And then it doesn't pan out because rates go back up, or the house gets sold, or the prices go up. So if you find a great opportunity, I think the moral of the story is take action now. I hope everybody's having a good week. It's a beautiful day in the neighborhood here, and call, text, message if you have any questions or want to get pre-approved for a purchase. Thanks.